Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 12th of February. So we saw some good moves earlier in the week on some of the majors and the dollar index, but it did teeter towards basically nothing over the last couple of days, especially the last two trading days. So we'll jump straight in and see if we can identify some opportunities of where it might relaunch today and into early next week. So we'll start out here with the Aussie USD. You can see here on a daily chart, it bounced off nicely off this 50 moving average. It hovered around this level for quite some time and it just went bang. And it's found itself straight into the place where we would expect that we're going to see resistance. We know that the 77.50 has been a pretty strong area for it in the past. It's been really struggling to get through this area. We can tell by the MACD that obviously the moving averages are very, very close together. The 26 and the 12 are basically flatlining because it's nearly back into the zeros. And this is a daily chart, so there's no surprises that we're going to see very little movement. The problems occur on this one now is we go to a smaller time frame, and we know we are at resistance, and the movements, although they have been pretty good getting up here, we have to wait for a change of trend before we actually get involved in this. We know we're at resistance, so it's going to be a hard level to break. Trying to break this level going long is probably not the ideal trade, especially on a Friday, because you've got resistance in front of you. So what we're looking for is a change of trend. We need the price action to get below the moving averages, at least on the 1 hour, and then maybe start heading down to that sort of 76.80 area, or even 76.50 back to the 200 on the daily would be fine as well. So a bit of a watch and see on this one. I'm not totally keen on the scalps or the longer term movement on it until it actually proves itself. It's at resistance, we know this, so wait for either a break of that resistance and then we can start trading, get into the 80s, or we'll wait for it to break down and get below these moving averages again and target that 76 or 76.50 with a couple of scalps. So we'll move on to the US dollar CAD. This is a similar story. Earlier in the week, we saw some big moves. It found its resistance at the 50 moving average as well on a daily chart. You can see there all through last week, it couldn't break through, but its ranges were starting to increase a little bit. You can see that the depth of these candles are fairly big compared to what we're seeing most recently. But this week you can see we've had the pretty good sell-off. It's down at that very, very strong support level. We know this is a very strong support. Like, we only have to go out to a monthly chart to see how strong it is. You can see it's been here for quite some time. Still pretty comfortable with this level that it is going to hold, and I would want to see a very significant break of this level before I start shorting this any further than the 126 flat area. So these two daily candles that we can see here, the last two that have actually closed, they're both hammer type candles at an area of support. So we know that the support is pretty strong down here. And we're effectively just waiting for a movement above the 20 moving average again. Not keen on trying to get it down to these lows, even on a scalp, because my preference is to the long, knowing that there's strong support there. And the MACD is starting to rise a bit as well. These two candles are telling, so I think we've got to be really careful there to only look for probably the long opportunities on this. So in order to trade this one, what we're going to be needing to do is go to the smaller time frames, of course. Like I said, two hammer candles in a row at this support zone is giving us the inclination it's probably going to go up. And we've also got the MACD tracking up as well, which is good. So we go to a smaller time frame, and clearly what we want to see here, no surprises, of course, we want to see a series of higher highs and higher lows on probably a 1 hour chart in this instance, because this is a pretty important zone, and we want to see it test the 20 moving average from above. Once we get that, then we can start tracking it up again and look for the previous areas of resistance, which is around that sort of 128.50 area. So I actually think this has got the potential to be a good scalping trade, especially when it does the business and gets up there for us. But it's one of those ones that it can sort of fluctuate, in this zone for a bit longer than you'd like. So you wouldn't want to just jump in it. You definitely want to see the price action confirm above the 20 moving average. You want to see the lightning bolt effect, which is the higher high, higher low sequence, to break out of this little zone. And then once it does that, we can start trading the 1 hour and probably even the 15-minute chart if you want to start scalping those moves all the way up to the 128 sort of 50 area, which is going to be the first place of serious resistance for this one. So we'll have a quick look at the US dollar Swissy now before we go to the dollar index. Now, this one here has done, look, it fulfilled its inverse head and shoulders. Like, we know that it pretty much hit it to the pip, and that's a perfect example of it, because you can see that apart from the fact that it was the distance of the inverse head and shoulders where it went to, it also coincided with the role reversal zone, which is at all that support there, which proved to be resistance at this point here, role reversal at its best. And when a pattern overlaps that and actually matches up for the take profit, it makes it even stronger. So there were no surprises there, and no one should have been looking for any more movement than that particular movement there. Now, in saying that, it's come back down all the way to the neckline. It's hovering just below it. I mean, I've got that neckline's a bit thick, but it is just below the neckline and just below the moving averages, which is not as ideal as I would like. I'd be a lot happier if it was actually price was hovering above those moving averages on the daily, but at the moment it is only just below it. It hasn't even moved enough to even swing back and sort of try to short off it. So my inkling on this one is to actually wait for a break above the moving averages again and see it retest this support zone effectively from above. I want to see price action get above the moving averages before I get interested in this. Not really interested in the short because I don't think that the range is pretty low. So I don't know if the potential's there for that. So it's a better trade to go up on this one. So it's just a bit of a wait and see. But you want to see price action on the daily especially get above those moving averages. Very, very important. Look, this one, the US dollar Swissy doesn't give you a lot at the best of times. So we're really sort of clutching at straws as to how much we're going to get out of it. But at the same time, if it does get above the moving averages and the neckline of this, we would expect that it would probably, with a little bit of US dollar strength, it'll easily get up to the roll reversal zone again, which gets us up to sort of that 90-40 area, which is a pretty good zone from here. So, again, it's only about 130, 140 odd pips, but it's still not too bad. For a US dollar Swissy, it's not too bad at all. So, again, just wait for price to get above this level here, and then looking for those change of trends on the smaller time frame to trade back to the 20 moving average to get you in and trade it up to that next roll reversal zone. So we'll move on to the all-important dollar index now. So the dollar index is effectively painting the same picture as the US dollar Swissy, but this one here is, it's clutching for dear life at this 90-30 level as well. Like, we know it's obviously a serious level. This line's been here for a long time. It's testing it. It's below the 20 moving average, which is not ideal again. But the last two daily candles, it's a little bit hard to see because they're a little bit condensed, but the price action has been really, really tight the last 2 days. You can see the start of the week again pushed down quite heavily, but it's finding itself at pretty strong support now at around this level. And I've got to give it the benefit of the doubt, really, because at the end of the day, a lot of the US dollar-based pairs are banking on this to actually strengthen up again. MACD is in its favour. It's above the zero now, so we know the moving averages are tracking in the right direction. It's very important, though, that this price gets above this 20 moving average. If it doesn't do that, it's going to hurt the US dollar-based pairs that we just talked about. So realistically, it's one to watch. Very rarely trade the dollar index anyway, but the euro's inverse of this, so we'll look at that in a second. But this one needs to hold here. We need this to consolidate and potentially push up above the 20 moving average on the daily, and that will reinforce the strength for the dollar-based pairs and hopefully push them into the direction that we were trying to achieve in the previous two that we looked at. So let's go on to the US dollar. The Euro USD. So, this is obviously the complete opposite of the dollar index, and it's pretty much painting the same picture. You can see prices hovering above the 20 and the 50 moving average there. It's kicked back strong earlier in the week. It's finding itself at a pretty strong place of resistance, just like the dollar index is at support. So we need to bank on this one to actually hold up. Now, this one can go one of two ways, obviously. So there's no question the strength would definitely increase on this one. But what we're probably looking for, the preferred trade here, is the short, because if we go the short, the dollar index will go up, the dollar-based pairs will also do their thing, which is probably the ideal scenario from a trading perspective. So from a selfish standpoint, that's what we want, because the technicals make more sense that way. Now, given that's the case, we're going to be looking for price to get below the moving averages again and push back down to that sort of 119.80 to 120 level, which is not a bad place for this to go. We can see there's definitely good pips there that we can actually get if it does break down below these levels. That's a pretty solid target around that sort of 119.80 is what I'd be going for. It overshot a little bit on that one. Now, we also have to be prepared for price to push up and actually make a new high. And that is possible as well. What we'd need to see in that instance, though, is a break of this level here. So this 121 sort of 50 area has to break with a daily candle. So if we get a daily close above that level, then I would be looking for the pullback to the 20 moving average. And at that point, I'd be respecting the 20 moving average to go long. And then we're looking for the previous highs of around that sort of 123.50 area, which still gives us plenty of room. So that's the important thing about this trade. You still got plenty of room even if it does go up. So my preferred is still to the short, only because it makes more sense, but it's definitely got room to go up as well. So it's a bit of a watch and see. Wait for it to either close above here on a daily candle, at which point we can start looking for longs, or the preferred trade is for it to go down below the moving averages, and then we'll be able to aim for the 119.80 again with a series of scalps on the smaller time frames. All right, we will go on to the US dollar yen now. So this one is painting the prettiest picture of all of the majors, really, because it's got the most defined areas to actually trade off. So we can see that we've obviously had that support. We had the inverse head and shoulders there, the imperfect one, but it was a good one for this trade. You can see that it's come back now. It broke out, it came back, and it's touching the 20. It's on the right side of the 20 moving average, which is more than you can say for all the others that we just looked at. So this gives us the most amount of confidence. Now, in saying that, this is not directly coupled with the dollar index, so the dollar index could still remain weak, and this one could still definitely go up. There's no worries about that. But ideally, in a perfect world, we'd like them to be going in sync. So if we see a little bit more strength from this level here, you can see that it's got the perfect lightning bolt. It's on the 20 for the support that we're looking for on a daily chart. You can see we had the indecision candle, which is great. If you want to get involved in this one, what you need to be doing is going to the smaller time frames. You can see the 1 hour is a little bit stagnant at the moment, so you just have to wait and for the price action to kick in. But the Asian sessions are they're not far off opening now, so they'll be hopefully kicking off soon. And we are going into a Friday, so just keep an eye on it. Like, you want to be scalping this one. The idea is though that we can definitely hit the previous highs that we were looking for around that sort of 105.70 to 106. Plenty of potential there. This is a 4 hour chart. You can see it's trying to make a series of higher highs and higher lows to complement the daily. So you can pick your poison really on the 1 hour or even the 15-minute. Any pullbacks, once we start to get a little bit of traction and we break this little zone here, any pullbacks to the 20 moving average on these ones are going to be tradable opportunities. So you can definitely jump on those, and we've got a pretty clear target, which is the 105.70 here, or even to the 106 if you want to push this hard. But the daily action is giving us a really good signal that there could be plenty more in it. So very good potential to get up to these levels here again if the 20 moving average holds. Hopefully the dollar index will do the right thing and get above that 20 moving average as well, and give us a little bit more strength to help push this one up. All right, the last one we'll have a look at, like we normally do, is the S&P 500. Again, two big days to start the week off. It's pushing to new all-time highs, so that's why the market's slowing down a little bit. So I can understand that. Your very indecision candles presenting for the last couple of days on a Friday. It's difficult to see this one pushing a hell of a lot higher without a pullback. The 20 pullback is probably the easiest one to go for. And that's at 38 sort of 50, the 20 moving average there, and that little bit of resistance. It's a role reversal, only just though. Like we're in an all-time high situation here, so you're not going to see any previous resistance around this point. So if it comes back there, you got to treat it with a grain of salt. But at the same time, we're looking for shorting opportunities, not really longing ones at the moment. So, with the indecision at the all-time high, I'd be looking for small time frame changes of trend to get this back down to the 20, which is around that 38.50. And then I think I would probably just wait and see on that one, whether it continues to short from that level or whether it turns around and starts to go up. That's a different trade altogether. But in the first instance, I think we need to get it back to the 20 moving average. And there's a potential for about 60 points there. So it's definitely there, but you've got to look for the smaller time frames to see the changes of trend. And when it starts gravitating to it, that's the place it's going to go. The 38.50 is almost a given once it starts to short. And then, take your scalp out of there. And if it continues to short, then look for a pullback to that level from the bottom, and you can continue to short it from there. But I wouldn't be going for a long-term move on this one. This is still definitely just a scalp. And then we play it like that until we get more evidence that a serious level has been broken by a daily candle. That serious level will either be up above the 39.40 or down below this level and below the 20 moving average at around the 38.20. So I hope everybody's had a great week's trading. It was really good early in the week. I know it's been a little bit slow the last couple of days, but hopefully that will start to pick up early into next week, because we are at pretty good levels, and I think there's still a lot of opportunity to get into some of these good trends that have been playing the game for us. So have a great weekend, and I look forward to seeing you all next week.